Mickey, we got a jobs report that came out. Retailers talked about November, December sales in a market that doesn't know how to go down. What did you see this week?
Well, the jobs report was a little weaker, the weekly jobs report, which was a little surprising. It's still strong, but a little weaker, which then leads us to believe maybe we won't get the 3 interest rate increases from the Fed, which is the best way to slow down the market rally would be for the Fed to increase interest rates. Some of the bricks and mortar retailers did not have a great Christmas season, but then you look at those stores, the Macy's, Kohl's, Gap. Gap actually was better than expected, but their sales were so low they had a very low bar to jump. JCPenney's, some of the stores you look at just aren't that. They haven't been doing that great because when you walk in, you get no service, you get no help. It's not surprising. It'll be interesting to see how online sales are to see the state of the economy. But the big thing is that the Fed may not get in the way of this market rally. So again, we kind of go back to the bad jobs number. Even though it's not bad, it's just not the super strong number we've been seeing. Could slow down the Fed, which then helps keep interest rates low, and it'll help fuel the rally and keep the market going.
Speaking of a rally, we had a Dow that really skirted almost at 20,000. And I guess the big question is that really a big deal? Should anybody care?
It's a great psychological number. It's a huge deal, as you see every time you look at the news, whether it be print, TV, radio. You talk to people, everyone's asking about the Dow 20,000. It's psychologically, it's a big deal against 30 stocks, 30 weighted stocks, which the top 5 weighted stocks in the Dow take up 31% of the weighting. So in theory, no, it's not a big deal, but psychologically, it's a really big deal. And it'll be interesting to see. I think we're going to break it. I think we're going to go through it. Whether we hold above it will be another story. We have earnings season starting next week, which is definitely going to help either push it through or maybe kind of hold it back. I don't see a whole lot of downside in the market right now, but again, I don't see a whole lot of upside either. I see us kind of sitting in this range now for a while until we get some news from what the president's going to do as we move forward, some economic news. We're pretty fairly valued in the market, but on the other side, there's a lot of money sitting on the sidelines. So every time we get a big drop, we're going to get some buying as traders jump in and try to get a little trading pop, and we'll jump back up. So I think we'll probably hover around 20,000 for a while.
Good to know. Mickey, in the meantime, as everybody's sort of waiting and seeing what the earnings reports are going to be, how do they get in touch with you?
They can email me directly at mickey@envestim, ENVESTIM.com. They can follow our Facebook page, Envestim, and they can follow us at Twitter @Envestim1.
Perfect. Mickey, thanks so much for the time. We'll talk to you next week.
Thank you, David. Look forward to it.